Good morning, ladies and gentlemen, and welcome to the AUTINS Group PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, we would just like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from AUTINS Group PLC. Andy, good morning, sir.
Good morning. Thank you very much. First of all, thank you for everyone attending and showing an interest in AUTINS as a company. Today we are going through our FY25 results and usual disclaimers in terms of what we are going to present today are obviously in place. So today what we wanted to do, first of all, for those of you who aren't familiar with AUTINS Group, we thought we would just give a very brief overview of what it is that we actually do. But then we wanted to, more importantly, get into our financials and our forecasts, talk through what we call our survive and thrive strategy, talk through how we are winning, and then, a lot of that is talking through the past and things that are happening right now. But we also want to talk about what's next, because we think we've got a very exciting future moving forward. So what do? So our purpose is to make the world a quieter, safer, more comfortable place. We manufacture components for predominantly cars, but also off-highway truck and bus, and we deliver to over 160 customer locations, delivering 20 million car components every year. We've got 4 global facilities, 4 European-based facilities, one in Tamworth, which is where we manufacture our proprietary raw materials. We've got a conversion site in Rugby where we convert that raw material into finished goods and set up before being shipped to the car OEMs. We've got a similar facility for conversion in Gothenburg in Sweden, and we've got a facility in Hilden, which is close to Dusseldorf in Germany. The Swedish and German businesses obviously supplying into the European automotive industries. So what we do, we like to say that we solve problems. We manufacture a number of components, and predominantly they are there for reducing noise and improving the thermal efficiency of vehicles. That is everything from a bonnet liner, through a bumper, through wheel arch liners, door blankets, dash mats, battery insulation, transmission under tray. One of the common myths about an electric vehicle is that because they are quieter, because they don't have an engine, they need less noise attenuation material. They actually need more. People used to like to hear the sound of an engine. They no longer like to hear the sound of an electric motor, nor do they like to hear the sound of the cooling systems and everything else that used to be masked by the engine. So actually our share on the need for our materials is increasing as we move into the electrification age. We have a proprietary material, we call it our Neptune material. It's a fiber-based fleece material, and it is predominantly used for noise absorption, but also for thermal insulation. We are the only UK manufacturer of this type of material, and one of only a couple across Europe who can make a similar product, and ours is the best performing. It's manufactured from the construction of a melted polymer linked to what we call staple fibers, and then they are sandwiched between 2 pieces of fleece to produce the product that you see on the right-hand side. And this is one of the this is the best noise attenuation material used in car vehicles. It allows less noise to get through than any other material in use. But we also take those materials and we convert them and create products that the end user sees significant value. So our 2 latest innovations are a product called AUDUCT. So this is about taking traditionally ducts are manufactured out of a hard plastic, and they lose a lot of heat, generate a lot of noise, and can create condensation in hot environments. So we've created a material and a product that effectively solves those issues whilst adding in a recyclability to that material. There's a number of OEMs who are really interested in this product, and we have received our first sourcing in the last financial period for this as well. We also have trim. So more and more car manufacturers are trying to remove the hard plastics from their inside of their vehicles. The users of cars don't like to see hard plastics. And not only that, they create echo chambers, which creates more noise in a vehicle, and therefore you need more noise attenuation material. We've developed a material that effectively creates the best of both worlds. It gives you a surface that is durable enough for the lifetime use of a vehicle. It has a soft touch feel to it, but it also has noise attenuation properties. And again, we've received our first nominations for this product through the last financial period. So obviously that's a very short update on who we are and what we do, but this is a presentation regarding our FY25 results. So I will hand you to our CEO, Des, to talk you through those.
Thank you, Andy, and again, thanks everyone for the interest in our presentation. We will briefly go through our financial results for the 18-month period that ended in March 2025. As if you have looked at our website and our latest market announcements, you'd have seen that we recently released the audited accounts for our extended 18-month period, a period which allowed us to, with the new leadership from Andy, to review our operations and prepare for our strategy and the changes that come ahead. So you can see there's the comparison on this slide is 18-month figures to 12-month period to FY September 23. So they're not directly comparable, but you can also see that on a pro rata basis, they're broadly similar. With obviously what's notable is our significant improvement on gross margin, and on the next slide we break that down a bit so we can introduce a bit more about the change in our performance. We have broken the 18-month period into 3 6-month periods, and in the latest between October 24 and March 25, you can see that our revenue was slightly below what it was in the previous period, but all remained stable. We reported a strong gross profit at 3.3 million, but what was considerably notable about that period is that our gross margin improved, and that improvement comes from some of the changes that we have introduced in the last 12 months, starting to bring positive impact into our business. The significant added integration of our German and Swedish businesses also contributed to reducing costs that form our gross profit, and the additional actions on right-sizing our business also meant that we have reviewed and massively improved our overheads, which is also quite visible in our strong EBITDA for the last 6 months of the 18-month period. You see an EBITDA of 1 million. You cannot hide that there was a loss before tax and after tax in the financial period and in the last 6 months as well, but that was significantly reduced, and we are directing our focus more into net profitability, something that unfortunately AUTINS hasn't reported since 2017. And see, we are a business that as shareholders, and we want to provide return to our shareholders, hence we are very much focused on that. And as we talk about the future and the forecast for FY26, you can see that this is our target. What you can also see, we have maintained our strong operating cash generation throughout the 18-month period, but more so in the last 6 months, which manifests the strength of our business model. We have continued reducing our net debt. We have maintained strong cash headroom Our cash balance has decreased, however, it is related to the repayment of long-term debt, which we can also see on the next slide. So on that one, you see a visualized waterfall chart of our cash flow in that 18-month period. Starts with, as it naturally does, with operating activities again, strong cash generation, proving the sustainability of our business model, especially as we introduce further improvements into that. We are also very much focused on maintaining strong working capital, which is represented by the improvements on all of the aspects of that, and mostly inventory. We have introduced more stricter controls on stock management and stock holding. We have improved our purchasing capability as we are now bringing stock from closer base suppliers rather than remote destinations, remote locations. And as I mentioned earlier, we have been repaying our long-term debt. The business that we have accumulated debts in the beginning of the COVID period under CBILS and MEIF facilities, and that's largely remained unpaid until pretty much the beginning of the financial period that we are discussing. We have commenced repaying that the long-term debt, and you can see that's drained 1.6 million of our cash. We are forecasting to repay that fully by July 2026, which is what we are, of course, also focusing on, so that once we are largely debt-free, we can maintain stronger flexibility of our business and adapt to changes and also invest for future growth. So in a single line, the way we could summarize that is that we have strong operating cash generation. However, in that 18-month period, we have seen an overall net outflow, which is largely due to repayment of long-term debt.
I was a bit quick on the slides there. Market forecasts. One of the things that we are really pleased with is the fact that as we've released these set of results, the market forecasts are now in the market for the first time since 2020. AUTINS removed market forecasts around the COVID period, and obviously due to the semicon issues suffered to the automotive industry, they weren't in a position to replace them. Des and I made it a priority when we took over as CEO and CFO to get these forecasts in, and we are delighted with the fact that they are showing that we will have a small net profit in FY26, accelerating that net profit into FY27 with revenue growth through 26 and 27 also. But we really do recognise that our group, and obviously this event is a part of that, we need to reinvigorate interest in our group. We need people to understand what we do, how we do it, and the journey that we're going on. And we're working with potential investors, including retail, in order to ensure that we do that. So the question is, I talked earlier about something we call our Survive and Thrive strategy, and it really is the combined to get to together, because obviously if we're not surviving, we don't have a business. But if we're not bedding in those plans for us to grow, if we're not in those plans for us to be profitable, then ultimately we'll continue in the circle that we've been in. So we've been doing two things. So the first one is in the Survive, we've been managing the cost base. We've been right-sizing our business, whether that is through the reduction of people from our organization, whether that is through looking at our facility spaces and how we utilize those, and any other cost within our organization, from company cars all the way through to the way that we utilize and manage our stationary system. We've professionalized and integrated the group. Des has introduced significantly better financial reporting across the business that's allowed us to make better decisions. When you've got confidence in your data, you've got confidence in the decisions that you're making. And we've also spent a lot of time sharing best practice. The group that we inherited was effectively 3 island businesses. There you had the Swedish business, the German business, and the UK businesses. And whilst they all manufactured similar things, they did them all slightly differently. By looking at understanding and who did what in the best way, and then trying to create commonalization, we've really seen some of that step change in efficiency growth. And that then comes into that optimization of operations. Our Neptune production, we bought the production line in 2016 and it's been running since 2018. But it's only now, as the new vehicles start coming in, as OEMs start specifying our materials, that we've got to that position whereby we needed our line to run efficiently. And so we spent a lot of time, a lot of development hours in order to get that facility up, running and operating at its maximum efficiency output. And our German business historically has relied on a flooring, selling some flooring business, some flooring out into the building construction market for its profitability. So we've spent a lot of time on the automotive side of that business, making sure that they can return to profitability as their business grows. Des mentioned meeting our obligations, meeting our banking covenants, repaying our loans. It's all very well doing all this activity, but if we can't meet our obligations with our bankers, then we won't have a business for very long. It's critical that we get to that position where we are long-term debt-free by July 26. And then more importantly, probably for the people listening on this call, is that thrive section. So how is it and what is it to grow our business and make sure that we are adding value for our shareholders and potential shareholders. So the first one is organic growth, selling more to those existing customers, growing our customer base, and we'll talk about that in just a minute. Product innovation, the ore duct and ore trim we've just talked about, and the really critical part with that is it increases our value per part. The Neptune material is brilliant, it's proprietary, it allows us, and it has a lot of interest from the OEMs, but we have to manufacture an awful lot of components in order to generate our revenue. The ore duct and ore trim material, in comparison, genuinely it has a high value per component and therefore allows us to sell those parts for more money and generate more revenue. And then the final one is the opportunity through M&A. As we've said, we are moving into that net profitability position. In fact, for the final 3 months of the last financial year, we were net profitable. And therefore, our customers are seeing that we've done the hard work in terms of right-sizing our company, making sure we are set for the markets and the business as it is today, rather than hoping that the volumes are going to come back in the future. Some of our competitors, some of the other suppliers in those markets, in our markets, have not done that, and therefore we believe that there are going to be opportunities for M&A in the sort of medium term. So how are we winning? It's no surprise we are a UK automotive component manufacturer. We have in the past had a heavy reliance on JLR. We are working actively to reduce that reliance, to reduce our share, to reduce the percentage of our revenue that goes directly to JLR. We focus a lot of effort on the tier 1 manufacturers, because if you can sell to a tier 1 for one OEM, then often they will consider you and source you for the other OEMs that they supply to as well. So therefore they are doing a lot of the hard work on your behalf, selling your material into the end users and the vehicle manufacturers. We've worked on becoming a trusted advisor to the smaller UK OEMs, so the Bentleys, the Aston Martins, the Rolls-Royces of the world, making sure that we are there and able to support them. There is significant money to be made by supplying to those smaller UK OEMs. Yes, you need the volume of the larger car manufacturers, but the smaller OEMs can be the icing on the top of that. And differentiating our product offering with ore duct and ore trim. Ore duct and ore trim gives us a seat at the table with the OEMs. It makes them want to engage with us because it's something new, it's something novel, it's something that they see real, genuine benefit for. And therefore, by having invented those materials, they are now engaging with us in a way that they haven't in the past few years. We've spent a lot of time reducing our costs, enabling us to compete in that tough environment. I'm a great believer that the price is what the market is willing to pay for your components. The cost is what you are willing to, what you are able to manufacture those components for. And our job, mine and Desi's, is to make sure that our costs are significantly lower than the prices that we leverage. So we spent a lot of time working through that in terms of reducing our PLC costs. No secret, you can go and read it in our annual report. Both Des's and my remuneration is significantly lower than our predecessors, but it's also things like taking out our PR company and finding more cost-effective ways of doing that. It's about looking at our subscriptions and the way we do our legals, for an example, in order to ensure that we are making the best use of the revenue that's coming through the door. What we've called independent Neptune. So this is changing the raw material sourcing for our Neptune material. It used to be sourced in the Far East at quite high pricing, and we found significantly lower priced options based in Europe, which gives us both a price benefit in terms of the cost that we're paying for those materials, but also a working cap benefit in terms of the fact that these suppliers now hold the stock for us, take on the risk of bringing that material in and holding it. So therefore, it gives us a double benefit. We've talked about the appropriate staffing levels, but also improving our efficiencies and significantly reducing our scrap material. We've also spent a lot of time transforming our German business. We've reduced the reliance on the volatile flooring business. The flooring business was very important for us as we went through the COVID period, and in fact probably kept the group alive. But it's also, since COVID, has reduced in terms of its value to us, and we needed to make sure that our German automotive business was trading at a profit and moving forward. They won a significant project with Tesla, which was announced previously. And that is now ramping up to full predicted volumes, and that's helping massively in terms of economies of scale and efficiency for them, as obviously their overhead is spread over a significantly larger portion of revenue for their automotive business. And then finally, a large premium OEM in Germany has specified our Neptune material for their EVs. This has been critical. It's been about 2.5 years in the making. And now that they've done that, we've won the first 2 projects with them, and we expect to win a further 3, whereby the OEM goes to a tier 1 and says, you should use this material. And it's a very brave tier 1 who doesn't follow what the guidelines from the OEM. So 3 examples of business that we've won recently. So the one on the left is what we just talked about. So this is our Neptune material. It's for an underbody MVH, starts production in November 26, with peak revenue at €694,000 per year. This is project 2 of 5 that we expect to be sourced on, all of which are a similar size and scale. The center one is our ore duct material. So this is the first sourcing by an OEM. This was by a prestige UK OEM. For our ore duct product, and whilst it's not the prettiest picture, it's very new in terms of these are our first off-tool parts that are being supplied for prototype builds, and the start of production of that one is April 2026. And just to give the scale difference on here, you know, that revenue, which is for a very prestige UK manufacturer, is valued at 440,000 per year and is a fraction of the volume in comparison to the German project we were just looking at. And then in Sweden, Sweden have just won a project using it for a UK manufacturer using JO5, which is our proprietary PE product, and that's for a sound absorption under tray. And the annual revenue of that is £550,000 a year. So we've put these 3 examples, and they're not the only examples of business that we've won, but we've put them on to show that we are winning with multiple materials in multiple markets to multiple customers. And that is really one of the key elements of our Survive and Thrive strategy. So what else have we been doing? We don't want to ignore our traditional business. Whilst we want to reduce our reliance on JLR, we have to continue winning with them. We have to continue trading with them. We have to continue making sure that we don't lose share. And we've won business through the tiers for the new JLR platforms, EMA, which is their Velar and Evoque-sized electric vehicles, and JEA, which is the new Jaguar electrical architecture. Our share at the UK premium OEMs continues to increase as we offer them the support and we offer them guidance in terms of what we're doing. They are sourcing more material directly from us. We've got opportunities from our competitors for running change business, which gives us revenue now. Our support and technical ability is being viewed as superior to the competition. That, coupled with our relative financial security, means that people are looking at us as a really good option when they have got concerns about some of our competitors. And similarly, as we go through and as we add value per part, we are offering more value-add solutions to our customers. This increases the price per part, it increases the reliance on AUTINS capabilities. It also offers us additional revenue streams because you can charge for the engineering, you can charge for the assembly, you can charge for the additional activities that we are doing for those. In Germany, as we've already said, we were specified by a premium German OEM for a part that's fitted to a vehicle. We've continued to win and in final quotation on a number of OEM opportunities. All duct and all trim have been presented to customers. We have approval to bid at several OEMs, and we have several active RFQs that we are working through, and believe that it's only a matter of time before we win our first significant all duct or trim contract in Germany. And we are diversifying the flooring portfolio. We talked about that business and the fact that we'd seen a drop in the market, and we're looking to diversify our products in the building and construction market to allow us to have a larger addressable market and to access more revenue in that area. To be clear, we are an automotive manufacturing focused company, but we want to ensure that this part of the business, which has been so valuable for us, starts to recover and continues to add value for us into the future. So that's what we're doing, and really important is to talk about what's next. We talked about the fact that we've got forecasts in the market. You don't get forecasts without a robust budget that's signed off for FY26. We have an achievable budget agreed and in place for FY27. And really, really important, and one of the things Des and I believe and are pushing as hard as we can is that return to net profit in FY26. Again, the group has not returned a net profit since 2017. And it's absolutely our aim, our goal, and our strategy for us to get there. And then, as we pay off those loans mentioned in the bottom part, the next section, we will start to see that net profit increase and accelerate into FY27, because we will be paying off our outstanding loans and move to be long-term debt-free. Our MEIF loan final instalment is January 26. Our CBILS loan final instalment is July 26. We are going to launch a new website. I suspect that several of you on this call have done a little bit of research about AUTINS as part of this, gone onto our website and been incredibly underwhelmed. We are too, and so therefore we have commissioned a new website that's due to go live in September 25. And as part of that, we are creating a section to help drive that retail investor engagement, where it's difficult to get information about AUTINS, trying to be able to share more information within that. We're also working to increase that engagement with the markets and analysts, part of what this call is about today, to increase the awareness of AUTINS more broadly. And then business growth side, first Neptune R, so our new fully recyclable version of Neptune. We have nominations for that product imminent, and we hope that during the next update we'll be able to announce that first nomination. We expect to receive continued nominations for all duct and all trim, continuing to increase the average part per price. And as we've already talked about, potential M&A activity, the right opportunities have got to be available. We are not going to go and do M&A for M&A's sake, but we absolutely believe that M&A is our path to creating a robust, sustainable business moving forward. And that ends the formal part of the presentation.
Perfect. Andy, Des, if I may just jump back in there, thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that have been submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboard. Guys, as you can see there, we have received a number of questions throughout your presentation this morning. And thank you to all of those on the call for taking the time to submit their questions. But Andy, Des, at this point, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so. And if I pick up from you at the end, that'd be great. Thank you.
No problem at all. So the first question came from Charles, and it said, Andy, what's your background? How did you come to develop Survive and Thrive? And can you provide an example of successfully implementing the approach? So I started in the automotive industry. So my very first job was working in the Jaguar Land Rover press shop at Castle Bromwich in Birmingham. And that's where I got a love for manufacturing. And I've never left, and I genuinely don't intend to leave manufacturing within my career path. I like making a physical product. I like being able to go on the shop floor and see what it is that we're doing on a daily basis. I spent a number of years working through various commercial opportunities and in the automotive space. So I worked for a small company called JFL Automotive. I moved from there to Denso, which is the largest component manufacturer in the world. From there, I worked for Unipart Group in their manufacturing division. I decided to leave the automotive industry for a little while, and I went to a UK FTSE 250 company called Morgan Advanced Materials, and I spent nearly 10 years, just over 10 years working for Morgan Advanced Materials, starting in commercial roles, moving into general manager roles, and then I had a global automotive manager role where we combined all of the automotive business globally. And then finally, I was sales and marketing director for our thermal products division for Europe, Middle East, and Africa. And that's when AUTINS came and asked me if I'd like to take over as CEO. How do we develop Survive and Thrive? So it was a team activity in terms of really looking at where the business was. I think if you, being really honest, if you go back and look at some of the announcements from sort of late 23 or late 2022 and into 2023, there was an over optimism in terms of where the organization was. There was an over optimism in terms of the performance of the business and where they were. And so therefore, when I came into the organization, it became very quickly apparent that we not only needed to thrive, which is what I was brought in to do, which is what, to leverage my automotive connections, my business development skills, and my general management skills in terms of sort of trying to drive the business. But we also needed to put those fundamentals in place. We needed to make sure that those building blocks were there. And we needed to ensure that everybody understood that whilst we were looking to grow the business and do the thrive part, we needed to make sure that we were stood on concrete. We had the foundations below us really to be able to do so. And that's why we created the Survive and Thrive strategy. And in terms of successfully implementing the approach, I've got a long track record of business growth in terms of within the organizations that I've worked. I've been happy to have a much longer conversation, but this isn't about me, this is about AUTINS. But that's why the AUTINS board of directors chose to bring me in, was my track record of growing business, winning business, and really developing from that side. Tom D asked the question, what is your current sales pipeline in terms of potential annual revenue? So right now, our sales pipeline sits at around £26 million per annum. That excludes business that we've already won. We take it out of our pipeline once we believe that it's won. But obviously that is a per annum business, and when you win business in automotive, you're typically winning for a 5 to 7 year period. So actually that's worth sort of north of £100 million in terms of total revenue to us as a business. Our new sales hires are they're on their journey in terms of being successful and converting leads into contracts. And the reason I say they're on their journey is it takes time in automotive. You don't convert business overnight. Some of the business that we are winning now, we first quoted on 18 to 24 months ago, and it's taken that long to get to that final nomination stage. We've been really, really encouraged by what they're doing, where they're working, how they're working, and the opportunities they've brought to us. And that links into another of your questions, Tom, about adjacent sectors beyond automotive, targeting more aggressively as part of those diversification plans. So one of the things AUTINS hasn't worked on previously is the truck, bus, off-highway, yellow cabbed goods, that type of market. And one of the people that we brought in was a very had spent a significant portion of their time working in those markets, more so than any of our existing salespeople. And we've really put a lot of time and effort and working. That person's been working on, first of all, creating opportunities within that market sector, but now moving into the execution and the conversion and the winning of it. And somebody once told me hope is not a strategy, but obviously other people are involved in decision making as well. So we really do hope we'll have updates on that within our next update. But what I will say is we are working towards ensuring we have more updates within that period. So George T asked a question about what percentage of group revenue do you expect to come from European customers in the next 2 to 3 years? Over the next 2 to 3 years, we expect that share to continue to grow. I would go probably slightly longer term and say within the next 5 years, we expect our European operations to be more than 50% of our organization. So the next 2 to 3 years, that's dependent on the timing of projects coming in, and we can't always control that. If an OEM decides to delay the launch of a vehicle, it's quite hard to see. But with the pipelines that we've got, with the revenues that we already know that we've won, we can see that within the next 5 years, our European operations will be bigger than our UK ones. And then the final question that's on there at the moment, can you give an example of the type of business which would make an attractive strategic acquisition? Yeah, absolutely we can. It's not a problem. So right now, it's no secret, our share price is depressed. It's fairly illiquid. And so therefore, us raising significant funds from a share issue is not particularly an option. We've also said to you that we are working incredibly hard to pay back our long-term debts because they have been sat as a millstone around our organization for far too long, and we need to get into a position where we're moving to that long-term debt-free or certainly sustainable debt within the business. So the types of acquisitions we're looking at, certainly in the short term, are the distressed asset, whether that is with OEM support, helping to giving us support in order to acquire a business, whether that is business from administration, whether or that type of deal. The reason we're looking in there is because we've done the self-help, we've done the work that we know is needed in order to take a business that's not profitable and move it into the profitable sphere. And then the final sort of aspect of that is what type of business is it we're looking for? We're looking for manufacturing businesses in the automotive or adjacent spaces, predominantly who either have similar processes to us or whose processes are vertically integrated to ours. So as an example, we could look at somebody who manufactures raw materials that we can convert, add value to those, and then sell them on to the end users. We could look at plastics manufacturers who are taking our type of material and assembling them onto their components to then sell those on to the end users. Or we could look for people who do similar die cut type, finishing assembly operations as we do, that would allow us to integrate those into our business. So I think predominantly it would be, certainly for the first couple, it would be in the automotive, manufacturing and similar spaces. And we absolutely will look at different processes. Sort of the products need to sit in the same kind of basket as we've got, or certainly within the same type areas of a vehicle as ours do, because that also allows us to leverage our commercial skills and our commercial teams in order to increase the revenue for the business that we might take on as well. I think that is the last of the questions, unless you've seen any others come in.
Absolutely, Andy. Des, if I may just jump back in there, thank you very much indeed for being so generous of your time and addressing all of those questions that came in from investors today. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended. But Andy, perhaps before really now just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that'd be great.
Yeah, I think the first thing that I would say is thank you, everybody, for your time and your interest in AUTINS as a company. I think it's no secret that AUTINS has had a difficult few years, and since flotation has not performed necessarily in the way that people would have wanted or expected. But I think you can see from the presentation that we've made today that we are on the start of a new journey. We're on the start of something that we believe is exciting. We're at the start of something that we genuinely believe will add significant shareholder value over not just the next sort of year, 2 years, but further and further on beyond. And we'd really like to thank those of you that are going to come along on that journey with us, because we genuinely think it's going to be very exciting. Thanks again for everybody's time. We do recognise that time is valuable, and so thank you very much.
That's great. Andy, Des, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of AUTINS Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.